All right, let's see here. All right, Bitcoin. Bitcoin also looking constructive. Okay. Let's pull up BTC. Okay. So retracing some of the pump from the FOMC meeting. But if you look here, gentlemen, on a lower time frame, okay, on the lower time frames, we are finally starting to reverse trend to a degree. Though it is not a lot of data, it'll work. So as long as we get this, like something like this, there's your next higher low, higher high. Okay. Bitcoin's finally starting to make a trend reversal. Huge. Need to keep this going. Okay. Because as we start to reclaim levels, we're getting bulled up to the tits, right? Let me get all these out of here. So we're clearly creating an uptrend on the lower time frames. Okay. So we like that. Okay. We like that. Creating an uptrend. We're starting to try to reverse. If you put this on the daily, this is the other macro indicator we've been taking a look at, which is the global M2. Okay. Here's why I'm very bullish on this. Okay. Global M2 has been rising and has hit new all-time highs. Okay. Again, all the macro data to me is lining up and setting up for a fucking massive move later this year. That's just what I'm seeing. Okay. So as we talked about before, the M2 is the global liquidity index. Okay. So here it is. M2 global liquidity index. This is on the candles up top. This is at new all-time highs now. Okay. So global liquidity is at all-time highs. Well, what happens whenever liquidity in markets shoots up? So this range is sideways right here. And because Bitcoin and risk assets are lagged, this range is sideways. Bitcoin starts ranging sideways. Then you get this move up higher to new all-time highs. All of a sudden you see Bitcoin do the same thing. Okay, then we draw down. What does Bitcoin do? The same exact move. Draw down. Okay. Then you see this move back up to all-time highs. Well, we're going to be lagged, but you're going to see something like this. Okay. That's what I'm seeing right now. Liquidity is getting injected into markets. And I've heard this, and this is just, I don't agree with this, but US M2 supply is the most important. Because, of course, if the M2 in the U.S. is going up and the U.S. is stimulating economy, that's going to have the largest effect on our markets. Correct. But to think that other markets or other central banks, like the Bank of Japan, the EU, the Chinese bank, to think that them increasing their monetary supplies wouldn't have an effect on U.S. markets is just not true. Okay, that doesn't make sense. Yes, there is another crypto announcement from Trump today. Exactly, he's about to speak. That's not true. I've seen people try to say like, oh no, it doesn't matter. It matters only if the M2 for the U.S. goes up. Da, da, da. That's not true. China, Japanese, Taiwan, Singapore, Hong Kong, EU, people in the UK, everybody else across the world. If their monetary supplies are increasing, where do they go buy their risk assets? Where do these nations go and invest their money? Everybody's invested in U.S. equities. Everybody's buying U.S. companies. S&P. Everybody's buying Tesla. What's it called? Well, not everybody now. Hilarious. Goofies. Tesla, Amazon, Facebook, what's it called? Or Meta. Apple, Nvidia is not strictly US based, but my point is that all these other nations who are increasing their monetary supply, they're putting their money into US markets. So it does affect US markets. So to say that only the US M2 matters, only if the US is stimulating, that's gonna have an effect on risk assets, is just not correct. That liquidity from other nations does make it into US markets. Oh, also, guess what? Where's the largest crypto exchange in the entire world located? You ever heard of Binance? Right? So it's not just Americans or US citizens that are investing into crypto, into US equities. No, nations across the world are doing that. They're all investing into these assets, and crypto is a global asset. It's not just Americans. So if M2 as a whole, global M2 is increasing, it's going to have an effect on crypto, absolutely, because that money will find its way into crypto markets. So when I'm seeing this global M2 reach new all-time highs, and we're seeing the US beginning to start stimulating, they're cutting QT in half. They're going to continue to cut interest rates. So now the M2 in the US is going to start to go down. To me, again, it just doesn't make sense that we're going to go into a recession right now. It's over, bear market. It just doesn't make sense. We have too many things in our back pocket at the Fed to stimulate the economy that it just wouldn't happen. It doesn't make sense. So again, I like what I'm seeing there. So we should see this next move up on Bitcoin coming in the next couple months. Okay. ETH. We basically called it could be the low. I'm pretty confident it's the low, but at the very least, we timed the low perfectly. We were talking about how end of the first week of March 9th, March 10th, we were going to get the low on ETH. We've been talking about it on stream. Those of you continue to show up. Oh, look at that. March 10th, low on ETH. Almost called it perfectly. Okay. So this is our major demand zone on ETH. Here's another reason why ETH is just makes sense from a, where's it? Percentage from the high. Let's do this one. No, let's do the other one. The reason ETH makes so much sense is because of this. No, I just did that one. Motherfuck. This one. Here we go. Let's do on the weekly. Okay, let's look at this. Here's why I'm not giving up on the ETH trade. Look at how discounted this is. Okay. Ethereum is a major L1. ETH right now is 60% off of its all-time highs. 60%. Okay. That's huge discount. That's more than half from its all-time highs. Okay. So whether you draw down, a little bit further down into 17, this region right here, between, what is that? Between like 1600, 1550, 1700, between that range, even if that happens, which I don't see that happening at this point, but even if you get that drawdown right in this major deep value demand area, come down a little bit further, you're getting generational entries on ETH. That's just my opinion. That's what I see right now, because this chart, to be 60% from its all-time highs, not only do you have so much room just to get back to all-time highs and make money off of ETH beta, just if it just touches all-time highs again, you also have the added advantage of the fact that, well, when it breaks new all-time highs, you're getting even more of a return. Okay, so ETH is not an asset that you're looking at and saying, oh, this is going to go to zero. No, certainly it's not going to go to zero. And if it's already drawn this much off of previous all-time highs, there's so much room for value, for reward on just even a move back to here or here, the all-time high, right? In my opinion, I still see ETH going to new all-time highs. But the risk to reward at this point to start bidding is there. It makes sense. Okay? It just does. Because even if you get a little bit more downside, Okay, fine. You buy a little bit more down there. Or if you don't have any more capital, then you just get a little bit more drawdown, then you move back up. Like the RR is going to be huge on this play. And you still haven't seen ETH BTC start to pump. You still haven't seen the IWM go into price discovery, which is whenever ETH goes into price discovery. This to me is just, it's such a no-brainer. The sentiment's terrible. People hate ETH. That's good. That's good. That's what I want to buy shit.